Now we get to start our credit and funding roundtable, and it looks like we've got everybody here. And let's begin. We got you all. Yep. So when it comes to credit and funding, research reports consistently show that small businesses have difficulties accessing credit and funding. For founders running small business, you don't need a report to show how hard it is. We've all seen it, experienced it, and lost sleep over it. So now I'd like to introduce our panelists who are making this easier in our credit and funding roundtable. I'll start with Kyle Wilson. Kyle, can you wave? And Kyle is the Senior Vice President of Commercial Finance at eCapital Corporation. eCapital is one of the leading alternative leaders in North America and provides various factoring, credit, asset-based lending, and other credit and funding solutions. Welcome, Kyle. Peter Paul Van Hoeken. Peter Paul, thank you, is the founder of FrontFundr, a pioneer in the crowdfunding space who is also an advisor for the Private Capital Markets Association of Canada, as well as the National Crowdfunding and FinTech Association of Canada. Welcome, Peter Paul. Giselle Melo. Giselle, hi, is the founder of MATR Ventures, MATR Ventures, a new venture fund that is positioned to better allocate venture capital to underestimated founders and leverage network connectivity. MATR Ventures believes that when founders win, everyone wins. How true is that? Welcome, Giselle. And last but not least, we have John MacKinlay. John, hi, CEO of Caary. Caary, with C-A-A-R-Y, is a digital lending and payments platform targeting the SME space, including startups, enabling these businesses to better manage their spend, the dissemination of virtual and physical credit or payment cards to employees, while creating a digital dashboard for receipt management, card management, and integration to accounting systems. Great stuff. You guys are amazing. Welcome, John. So let's get started. Credit, capital, funding, and cash flow are the lifeblood for every business. Each of you are doing something so unique and very much needed in the market right now for small businesses. So here's the question to start the discussion, and you can all come off of mute because you'll all be fighting to answer this question right away. Given post-pandemic debt, can you share advice on ways to deal with it, given your background in supporting businesses from a financing standpoint? So can we start with you, John?
Yeah, happy to. So, and thank you for inviting me to the panel. Yeah, if we think about what's happening within the small business domain, and particularly coming out of the pandemic, it puts a huge premium on businesses being able to, really secure up lots of different types of liquidity. And whether that's traditional credit for a small business, or whether it's equity, regardless of the form of capital, it's incredibly important that businesses have access to capital when recovery is choppy and cash flow predictability is at an all-time high of uncertainty. But not only that, being able to capitalize on opportunities that hit different businesses, you want to make sure you've got lots of dry powder. So I encourage small businesses to constantly be thinking about that, and that should be top of mind. And then that puts a premium on the source of that liquidity and the source of that capital. And as we all know, it's been very difficult for small businesses to secure bank credit. And frankly, it's been difficult for them to secure equity liquidity and, in advance of an entity like FrontFundr bringing that dimension to the market. So increasingly, we see small businesses, more disenfranchised or stressed out by their relationship with banks, and really enter the opportunity for companies like Caary, who provide a lot of liquidity. We provide intra-month liquidity in the form of the credit card, but a key to our strategy is being able to roll that into operating lines of credit, just on the back of the natural revolving capability of a credit card platform. But also what's happened in the consumer domain around buy now, pay later is actually even more compelling in the small business domain in the form of installment lending. And as on the basis of the credit card platform, we get to see a lot of demand around capital assets and can think about different liquidity solutions. So this is a very difficult concept for a bank to execute against. And we take pride in the fact that we've got deep credit skills around small businesses and cash flow financing, and use lots of different analytics to assess credit worthiness and credit capacity and pricing for different small businesses. So we just see that this is it's an incredibly compelling value proposition in the marketplace, and not just good for the small businesses and the owners and employees of those businesses, but this is good for the Canadian economy, where 97% of our businesses and 70% of our employees are in fact anchored to small business.
Mm-hmm. Oh, thank you. Kyle, love to hear from you.
Well, thank you so much. I'm happy to not be the first person to speak after Caitlin. Wow, what a compelling speaker. That was fabulous.
Yes.
I think to build on John's point, and to everyone here, liquidity really is the lifeblood of any business. And how we can provide, how any cash flow provider can offer access to cash, not only at a competitive rate, at a competitive offer, but reliably, is so important. I'm a CPA by trade. I've been a banker and I've been a business owner. So I've sat on both sides of the desk. And when a business owner tells me I have to make payroll on Tuesday next week, I've been there. And that reliability and consistency is really a big sticking point with the people that we deal with, and certainly a value proposition that we come to in the market. A bit about eCapital, we're about $1.3 billion in assets, a worldwide company, Canada, the United States, and Europe, and growing. And we really focus on fast, reliable cash flow. We'll do that with invoice financing, traditionally called factoring. Maybe in Canada, the F word, which I work every day on moving past, and also asset-based lending, where we will provide liquidity and working capital that way. So that can be receivable financing, it can be inventory financing, and from time to time equipment. What we've seen in Canada, in the US, with government funding starting to curtail, is a lot of companies who had government money maybe just stringing their problems along, coming to the forefront. Money helps, but it doesn't fix problems. So we're certainly there to provide working capital and some advisory when needed. And yeah, we're certainly seeing a rebound in the economy. There's no doubt about it. Manufacturing has been robust for us. Transportation, very robust. And then some unique businesses that are reshoring back to North America, be it, say, basic metals, microchips, and then services around oil and gas. We've been very, very active. So yeah, the economy's been strong. We're happy to be a part of it, and certainly happy to partner with North American businesses.
That's really another good news story. The economy is showing strength.
Absolutely.
Yeah, because again, we're not hearing that in a lot of media reports. It's really, really reassuring to hear.
Yeah, I mean, unemployment is running wild, or sorry, I should say unemployment, the opposite. There's lots of jobs out there, finding good candidates. I think, wage pressure is real. Businesses are having to pay more for good talent. I think with interest rates gradually rising, you're going to see some curtailment of that. But that's part of the function of a healthy economy, right?
Yeah. Excellent. Giselle, love to hear your input. You're on mute, love.
Hi, everybody. Brenda, Barry, thanks for having me. Hi, everybody. First, let me introduce my sexy background, because I just flew in from Toronto. I'm in New York, so I just landed. So pardon the background, everybody. But nice to meet everyone. And I'm gonna, I think Kyle did the same. Salute Caitlin on her review of the markets and what they're up to as a business and what it was like building the business. And so what you mentioned, Brenda, about, moving forward, some of the challenges, how do small businesses deal with debt, et cetera. I'll speak on 2 points because as a fund, we're more focused on companies that are looking to scale, that are tech enabled. But I'll also focus on those, maybe you're at a point where you're still struggling. So I'll kind of touch on both ends of it. And I want to touch on both ends of it because now we're seeing rising interest rates, right? We're seeing deglobalization based on what's happening between Russia and Ukraine. I think any business that requires or relies on shipping anything is struggling now with just the movement of parcels of any kind, right? Those bottlenecks. So that's why I want to touch on a little bit of both. So on our end, we are a venture fund. We're actually still raising, but yes, our focus is what we call underestimated founders. So women, visible minorities. Basically, it's a large group. It's now the new majority. It's now the new majority, which is they say by 2031 it'll be half of North America's population, but you receive a small share of venture capital. So that's the space that we are in. And so when I'm referring to small business, we're really speaking about companies at the early or Series A stage that are tech enabled across a number of industries that are looking for equity, right? And large amounts of capital because they're building something scalable, right? So it at this stage, it could still be a small business, but it's very much structured and set up to be a company that will scale versus, and as I say, so that's a type of business. We're excited. Rising interest rates in this world is very, this world we're playing in, very, very attractive because we're kind of like a hedge against rising interest rates. But then when you're dealing with small businesses, like we saw during the pandemic, a lot of businesses suffered tremendously. A lot of them non-tech enabled, who are hopefully now tech enabled, because I think you have to be. If you're not at some degree a tech enabled company, it becomes very difficult to survive in this environment. But I would say, again, back to what Caitlin is saying, we can talk about all the different, alternative funding options. And I think a number of you touched on them, like factoring, asset-based lending, crowdfunding, right? Grants, et cetera. In many cases, though, these types of funding require that you have something there, some form of collateral, some revenue, assets, something that you can lend against or use to unlock other forms of capital. So revenue is king, right? It comes back to what Caitlin was saying, like any business owner at some point in your business growth, you realize that all things are important, operations and hiring and becoming smarter about the way that you position and brand all those things. At the end of the day, though, sales is everything. Revenue is everything. And with revenue, then you can unlock different types of funding. With revenue, then you can make changes to the business. With revenue, you can, because there's a huge competition for really good talent, you can hire some of the best of the best. But I think it really comes down to, at the end of the day, revenue. And so I'm not sure that that's different now post-pandemic, especially if you have a lot of debt, if that's any different than before. I think it's business, basic business principles. It's revenue. But I will say I'll make 4 points and then I'll stop there. It's like, if you can make growing revenue your primary strategy, just let's say versus simply reducing costs, because I think there's always a lot of focus on decreasing your burn rate, reducing costs. But if you can make growth or revenue your primary strategy, mentally, in terms of the amount of time you allocate towards your business every day, I think that's helpful. And that might mean that you might have a core product, but you may have to sell brand experiences around that product. You might have to upsell current customers that are already familiar with your brand. You might have to collaborate with other brands so you can co-share on the costs of marketing. But at the end of the day, it's all revenue driven. The second I would say is bootstrap marketing, right? It's like social media tools, digital tools, using those to the maximum amount possible, because they are free tools. Now, they require time, but they don't require revenue. And so if you can keep more of the revenue to do other things and bootstrap a lot of your marketing using digital tools, I think that is something that I would recommend to any business, doesn't matter what business you're in. And then of course, cutting non-essential spend. So, right down, like I'm saying, if you're the small business, that might mean like you go from living alone and living a nicer life to finding a roommate. And I'm being very honest, like it depends on the type of business that we're talking about here, but we saw it in the early days of the pandemic, the very rapid changes and the iterations people needed to make to their business. I think those still hold true until you're in a very positive, revenue positive, profitable situation where you can go back and live a nice life, paying office rent, working from home. There's people have an option now to get an office or get some kind of a space. Hold off on that and continue to work from home until that's a cost cutting mechanism. And then just looking at your own compensation is like, have enough to do the things that you need to do to be healthy, to pay your bills. But other than that, retained earnings, put everything back in the business. So again, everything comes back to revenue. Is how do I maximize the amount of liquid capital that I have to be running my business every day? Stop there.
That's really great advice. Really, really great advice. I think sometimes as founders, and you do, once you do kind of get some money, the first thing you want to do is get a big office, spend some money, have that special desk because you think you deserve it. But as Caitlin was saying, and as you're all saying, is hold back. And something that the theme that's coming through loud and clear is the importance that sales is everything. And I think a lot of founders struggle with sales because that isn't usually inherent in a founder. They've got the big idea. They're the entrepreneur. They've got this vision and big idea. But to actually go and sell it, that's the challenge. So you guys are really providing some wonderful advice. All right, Peter Paul, over to you, because you've got an amazing concept, and I know that equals tied to you quite a bit.
Great, thank you. Thanks, Brenda, and it's great to be today on this panel. Thanks for having me. It's great to already get some perspectives here and to sort of tag along there. And a couple of comments made is, first of all, startups and scale-ups, private companies in general are key growth driver, growth of, driving innovation, driving jobs. And so that's what we need in Canada and anywhere else for that matter. And it's those small companies that typically, because they are starting up and they are in a growth process, they need to get capital to basically finance that growth, to actually even get started and then finance their growth. And because the fact that they are in early stages and not a going concern company yet, they are indeed, as was mentioned earlier by John, is that they're not bankable yet, or to a very limited extent. So to back that up, they need access to typically to. And so that's one thing. It's really about, these young companies need access to capital. And then secondly, if you look at the sort of the typical range, there is, the early stage companies perhaps needing, let's say, $500,000 to $2 million, or it could be more, but there's sort of a funding gap in that space where you went to perhaps put some of your own money in, go to some family and friends, perhaps an angel or two, but then where else do you go? VCs won't look at you yet too early. Some love to hear your story and then say come back later. So where do you go to actually raise that capital in that stage? And so then thirdly, what also Caitlin and Giselle were alluding to is accessibility to capital and inclusivity. We know female entrepreneurs are having definitely struggling to get access to capital, and if you look at VC money going to VC entrepreneurs, they'll even 3-4%. So what we built with FrontFundr is to indeed create a marketplace that provide startups, growth companies, scale-ups access to an entirely new source of capital basically from the public, and to provide that access to anyone really. So to create an inclusive and an accessible source of capital, and it goes really well hand in hand with other traditional sources of capital. So, and if you think about the pool of capital with the public that potentially could be unlocked by enabling startups to raise from the public, is enormous. Like it's on per annum we estimate to be at least 2-3 billion per year. So really, providing these companies access to capital from the public, and enabling any investor, so whether you're an angel investor or you're a smaller retail investor, to basically invest for perhaps as little as $250 or $500 or more. That's really what we believe is really adding a new source of capital to the mix. So it's two sides. Is one side is providing startups access to this new pool of capital, and on the other side of the marketplace is to really open it up for anyone that really believes in the company, likes to see that company succeed, and can help participate. And you don't need to be an angel, or you don't need to be a VC. It could be really anyone. And we've seen that in the public markets, where retail investors are now really participating, have been participating, particularly through online brokers in the public markets. And now we believe that sort of the next stop really for retail investors is private companies, and to start investing from the very beginning. So those are sort of the two sides of the marketplace where we're going, we're approaching this challenge from. And certainly post pandemic, it's even more important that companies are able to raise that capital to get started, to finance their growth, and then they also get access to other sources of debt capital through credit card facilities or debt financing, etc. So yeah, it's really the funding mix that equity crowdfunding can make a tremendous contribution. Just to put it in perspective, if you look at geographies like the UK, where FrontFundr-like platforms have been going at it for over 10 years now, about 40% of startups actually raises through those platforms all their funding, or use it as an additional channel. So it already went sort of mainstream. And we are definitely here in Canada will see the same. Certainly, as since last year, the regulators in Canada also introduced new harmonized crowdfunding rules to facilitate that.
Yeah, Peter Paul, you mentioned a really interesting point. So I've done some consulting through the years with smaller startups who are looking for that first $500,000, and they can't get it. Nobody will touch them, and they're always being told, you're not asking for enough money. Ask for 2 million. Ask for 5 million. Where they don't have the capacity for that. So what advice would you give to someone listening today? If they only need about, say, $500,000 to get themselves going, what advice would you give them?
Yeah, and absolutely. So that's indeed the funding gap I was talking about, is where do you go for that kind of funding? And I would well, honestly, I would say, look, VCs and institutional investors, you're too early. You don't even really want to spend your time on that. And if you do it, to your point, then you say you got to raise more, otherwise they think you're not serious, not thinking big enough. So my advice would really be is do explore the alternative funding options on the table, and I would say definitely look at reaching out to the wider investor community, and explore investment crowdfunding as an additional source. Perhaps you got some family and friends that believe in you, that trust you, want to support you. Now why wouldn't you extend that and go to a wider community? Perhaps you've got other people in your broader network, or perhaps even your first few customers that say, hey, this is cool, I can really see this skill, and I believe in your product, and now I actually have an opportunity to participate in your growth by taking a piece of ownership. So my advice will be, explore the new options on the table, and equity crowdfunding, investment crowdfunding is absolute one, I believe, for those kind of companies looking for $500,000 or $2 million to further explore and see if it works, if it could work.
Great advice. So I'd like to open the floor, because I see, John, you're nodding your head, and yeah, what advice would John, Giselle, and Kyle, what advice would you have for a smaller startup, small business?
Yeah, I think Peter Paul hit it on the head. I believe that segment of, under $1 million, maybe it's under $500,000, but that's the lubrication of the system that we need.
Yeah.
And you will rarely find that in an institutional venture firm. There's a couple in Canada, but you can count them on one hand that would entertain something like that. So I think that's a great approach. We carved out an allocation with FrontFundr when we did our late seed raise. And it was a great experience. So we also had what I would call friends and family and high net worth family offices. But part of the reason we wanted to do it was the democratization of the asset class. And it was a great experience for us. It's a regulated entity. You have to go through the diligence process, but I just think that's in the coming years, we'll see, organizations like FrontFundr, and I'm sure FrontFundr will be one of them, that really create that liquidity in the marketplace, the equity liquidity in the marketplace.
Right, Giselle, Kyle?
Yeah, I can jump in. Sorry, Giselle. Yeah, I think Peter Paul makes a really good point. That concept of democratizing funding is epic. It's huge. And I'm a Canadian. God bless Canada. But we can be very slow to adopt technologies. And I think, like anything in life, once we sort of get past that initial uncertainty, the floodgate can open. We do a lot of work in Canada, a lot of work in the United States, and I know in, say, California, for example, there's private equity groups that are gagging to do $3 and $5 million deals, and in Canada, you would be laughed at, right? If you're not 20 million, you're not even close. So it is neat to see, and I think with this concept of revenue and growing revenue, I can't do anything other than back that claim. And really with what we do in invoice factoring is get that cash in your pocket within 24 hours. So that allows the next sale, that allows the next project, that allows that sort of cash flow stream to walk. And we will do small transactions. I mean, we will do a $250,000 deal. We're going to cap out at about, say, 40 million US. But we will do 250,000, and heck, if it was smaller than that and compelling, we'd look at it. And it can be a little bit more expensive than traditional debt financing, but it's always cheaper than equity financing, no doubt about that. Yeah,
That's great pitch, Kyle. And Giselle, you've got 2 minutes to sign us off.
I think everybody's touched on some of the golden nuggets here. I mean, FrontFundr, absolutely a phenomenal platform, source of funding. I know a number of people that have used FrontFundr successfully. So I'm very much anything that's democratized, decentralized, not only giving founders or businesses access to alternative capital, but allowing those who may not be accredited investors to get involved in the innovation economy. So I'm a big fan of FrontFundr. So salute Peter, huge. And then yes, there's factoring. There is a company called Clearco. I think they do phenomenal work. I'm a big fan of Clearco, a Canadian. They're an all Canadian company doing phenomenal things for any companies that are basically selling online. If you're selling online, you have an opportunity to tap into that. I know I spoke about revenue already. And then there's one thing which I know is probably the most non-popular thing to say. But as a founder first, before I decided to get into the VC space, and very intentionally get into the VC space to deal with a lot of what we're talking about here, as a founder, one of the biggest mistakes I made is not looking globally for capital. Canada is my home. It is my favorite place in the world. I will always hold it in my heart. But the reality is, if you're building a business, there's two things that are against you: time, which impacts your runway, and pressure. You need to build, right? If you're bootstrapping, you don't have the luxury to be like, okay, I'm going to stay in Canada. It's not a luxury. If you are a true entrepreneur, you don't have that luxury.
Yeah.
And I encourage every founder, tap into every alternative resource you have in Canada, spend twice the amount of time looking at those resources in the US. And a lot of Canadians don't like me for saying that, but I am first and foremost, and hey, I'm launching a VC fund now in Canada, but I'll be the first to say you need to step out and look globally, because if the pandemic hasn't shown us that we are playing in a global world right now, we have no boundaries. There is absolutely no reason either you can't look for capital, you can't look for clients. So it goes back to revenue. If you tell me you can't sell in Canada, I'm going to say, well, how are your sales in the US?
Yeah.
You know, so for me, it's no excuse. The world is our playground, and we have to tap into capital and clients wherever we can. So
wow. On that note, I'm gonna call our time. That's excellent advice from all of you, Giselle, Kyle, John, and Peter. Thank you so much for sharing your time and information with us today. It's been a great discussion. Lots to learn. Thank you so much.
thanks, everybody.
Thank you.
Thank you.
Bye-bye.
Wow.